Here is by far the number one most common Forex mistake, and I think this goes in trading any market, and it's totally contradictory to what we've always been taught. We've always been taught to just simply to buy when the price is low and to sell when the price is high. And this is the number one most common mistake amongst retail traders. And I'm going to explain to you why in just a second. And I promise once you understand this, this is going to shock you. This is going to change the way that you think about trading forever. So here's the number one mistake, right? Buy low and sell high. And you can see here on this chart here of euro dollar, you can see that, yeah, price is really low, right? Like it's definitely low. So we should probably buy and then we should just sell it back again high. And this is the number one most common mistake. And well, in theory, yeah, it seems to make sense. Buy low, sell high. But here's the reality of it. The reality of this is that when you're trying to buy low and you're trying to sell high, or you sell high and you buy back again low, right? The problem is that automatically you are trading against the trend, right? If price is going lower and lower, that means that we're clearly in a downtrend. And so the problem with this is that automatically you're trading against the trend, which is one of the lessons that you should have learned early on in your trading career, which is to trade with the trend. The trend is your friend. Now, you'll see this is funny across pretty much every single market. You can go to myfxbook.com/community/outlook and you can see the sentiment data, which is really, really powerful. And we're going to spend some time taking a look at this so that way you'll never make this mistake again. But if we just take a look at euro dollar, for example, we can see the short and long position. So you can see that 58% of people are in short trades, 42% of people are in long trades. We can also see the number of lots. So there's currently 6,300 lots that are traded in the short direction, 4,500 lots that are traded in the long direction. And you can also see the total number of positions. So here we have about 21,000 people that are short and we have about 14,000 people that are long. And again, you can come across any asset or any market here and you can see this sentiment. This is basically just pulling in data from like thousands and thousands of retail traders across the globe that are connected to MyFXBook and connected to different brokers that use MyFXBook, which by far, this is the number one I would say most popular retail trading tool that we're able to gather this data from. So what we did is we built this little indicator and this will drive home the point even further, but essentially I can see here a couple things. I can see the short and long positions. And again, this is pulling in data from MyFXBook, but I can see the short and the long positions here. So again, I can see here, I can see for example, NZD USD, I can see, 32% are short, 68% are long. And then over here, I can see trend bars. So this is going to be really interesting, but if it's blue, it means it's in an uptrend on that time frame. And if it's red, it's on a downtrend on that time frame. So I think the really interesting thing to look at is to look at ones that are clearly in a trending market. Like if we look at USD JPY right now, we can clearly see across the 1 minute, 5 minute, 15 minute, 30 minute, hour, 4 hour, daily, weekly, and monthly. We're all in an uptrend. So clearly this is an uptrend. You should clearly be, going long, right? However, if we look at it, 75% of people are actually short in this market. So again, if we look at it here, here's USD JPY, for example, on a 1 hour time frame, and we can see, guys, is this an uptrend or a downtrend? This is very clearly an uptrend, yet we can see that most people are actually short. Now, why is that? Well, most people are short because they're trying to basically catch the top and they're trying to sell at the top, right? And then buy back again lower, right? And here's the big problem, right? The big problem is that, yeah, okay, we see it's up, right? It's up. And we see that people, they may try to, for example, get short here. They think this is the top of the market. They try to get short, boom, it runs back up. They try to get short here again, boom, it runs up and it continues to run up and up. And so the problem with buying low and selling high is you don't actually know how long this trend is going to form for. So for example, here again, GBP JPY, we can see clearly an uptrend. The only time frame that it's on a downtrend is the 1 minute time frame. So, and also that's the least important time frame, right? We see 60 or 73% of people that are short. Why are you short in an uptrending market? Same thing if we take a look at CHF JPY. This is very clearly on the daily time frame. This is very clearly in an uptrend. Actually, on all time frames, it's in an uptrend, yet 79% of people are short. Why? Because they're trying to time the tops and they're trying to time the bottoms. And this is the big problem. Now, also here on MyFX book, we can see the short and long positions here and how they change over time. And you can see that retail traders are, they're so notorious for trading against the trend because a lot of the times they're using like overbought and oversold indicators and they're trying to catch the tops and bottoms, which as you can see here, right, as the market continues to move up, people go short and short and short and they continue to increase their short position as the market moves further and further up, which is totally backwards. And again, if I just take a look at the 4-hour time frame here, for example, too, as the market goes higher and higher, people are getting shorter and shorter and shorter until they eventually either blow their account, which happens a lot of the times, or they hit their stop loss, which is why the market starts to reverse. And again, you can see, when the market starts trending down, what happens? People start getting long, 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 which is, again, absolutely backwards. And again, you can look at this on any time frame. This is the 15-minute time frame. Boom, the market starts trending up, people start getting short. You can see this on the 5-minute time frame as well. As the market starts moving up, people increase their positions more and more to short positions. As attractive as it may be to try and buy low and sell high, or sell high and buy low, as attractive as this may be in theory, the reality is you'll always be trading against the trend, which I think trading with the trend should take precedence over trying to catch tops and bottoms. So if you thought this video is helpful, then you'll really think this next one's helpful. This was just one tip, but if you'd like to know 10 different Forex trading tips and tricks to instantly put you in the top 1% of Forex traders, then make sure that you check out the video that's on the screen right now.